Welcome back for another deep dive. If you've been keeping an eye on the markets at all lately, you've probably seen gold's been having quite a year.
It really has, up over 30% already.
Yeah, and some analysts are saying it could keep climbing even higher, like way higher.
Possibly even hitting $3,000 an ounce by the end of 2025.
That's right, $3,000 an ounce. At least that's what Markets Insider is predicting, based on some pretty in-depth analysis from Goldman Sachs. We're going to dive into all that today and try to figure out, what's driving this golden optimism.
Well, they highlight three key factors.
Okay, lay it on me. What's the first one?
Central banks.
Central banks. What do they have to do with gold prices?
Well, after those sanctions hit Russia, after the Ukraine invasion, other countries, around the world kind of had a wake-up call.
Oh, I see.
They started to realize how much they depended on the U.S. dollar.
And they decided to diversify.
Exactly. They started looking for ways to, spread their risk. And that's where gold comes in.
So instead of keeping all their reserves in U.S. dollars, they're, buying gold bars now?
Precisely. Because gold's always had that reputation, safe haven asset. It tends to hold its value even when things get a little, crazy.
So it's like the classic hedge against uncertainty.
Right. And Goldman Sachs seems to think this trend of central banks buying up gold, it's probably going to continue, even if it slows down a bit.
So they're not just, making a quick grab for gold and then calling it quits.
Doesn't seem like it.
Oh.
The analysis, it points out that since 2022, central banks have been buying an average of 85 tons of gold every single month.
Wow. 85 tons a month.
Yeah. Though Goldman projects that'll ease up to about 30 tons a month by the end of 2025.
30 tons is still a pretty big chunk of change.
Oh, absolutely.
I mean, if you're a central bank and you're buying up that much gold, that sends a pretty strong signal, wouldn't you say?
Yeah.
Makes you wonder about their confidence in those, traditional currencies,
Yeah. It definitely makes you wonder about those global financial dynamics. I mean, it might not be a complete vote of no confidence in the U.S. dollar, but it's definitely a sign that countries are hedging their bets, spreading their risk around a bit. I mean, think about it. If you were in charge of managing a whole country's wealth, wouldn't you want to have a diverse portfolio?
I mean, yeah, you wouldn't want to put all your eggs in one basket.
Yeah.
Which brings us to that second factor Goldman's pointing to.
Right.
And it has to do with interest rates here in the U.S.
This is where things get really interesting, especially for anyone who's, into investing or just curious about how all this financial stuff works. Because there's this kind of inverse relationship between interest rates and gold prices.
Inverse relationship.
Meaning when interest rates go up, gold tends to, lose its luster a bit.
Okay, so let me wrap my head around that. Why would higher interest rates make gold less appealing?
Well, think about it. Gold doesn't actually generate any interest, right?
Yeah.
Unlike bonds or, savings accounts.
Right.
So when interest rates are high, holding on to gold means you're missing out on those potential earnings.
That's also about opportunity cost.
Exactly. But here's where it gets even more interesting.
Okay.
Goldman's predicting that the Fed's actually going to cut interest rates to 3.25% to 3.5% by the middle of 2025. And when rates go down, well, gold starts looking a lot more attractive again.
Interesting. So if the Fed actually does lower interest rates, like Goldman's saying, that could give gold prices a pretty significant boost.
That's the thinking. Plus, Goldman's research dug up this other intriguing little detail. It has to do with these things called gold-backed ETFs.
Gold-backed what now?
ETFs. They've noticed these ETFs tend to see a gradual rise for about 6 months after an interest rate cut.
Hold on. Back up a sec. For those of us who don't speak fluent Wall Street, can you break down what these gold-backed ETFs actually are and why they matter for the price of gold?
Sure. So ETFs, they're basically baskets of assets that you can invest in. In this case, a gold-backed ETF, it tracks the price of gold. And when people invest in those ETFs, demand goes up.
Which pushes prices higher.
Exactly. Good old supply and demand.
Right.
So more demand for the ETFs means more demand for the actual physical gold they're based on.
I see. Puts upward pressure on the whole market.
Exactly. Now, put yourself in an investor's shoes for a minute. You're seeing central banks stocking up on gold, the Fed potentially cutting rates. Does this make you think twice about maybe adding some gold to your own portfolio?
It definitely makes you think. But of course, anyone listening out there, remember, always do your research, consider your own risk tolerance, and talk to a financial advisor before making any investment decisions.
Always good advice. But it's fascinating to see all these different pieces of the puzzle fitting together,
Right. So we've got central banks buying up gold, the possibility of lower interest rates, What's that third factor Goldman Sachs is highlighting as a potential driver for this whole gold rush?
Well, it's something we've already touched on, gold's age-old appeal as, that safe haven asset.
Right, okay. So let's unpack that a bit. What does it actually mean for something to be a safe haven asset?
It's basically when the world starts to feel a bit wobbly, think. Geopolitical turmoil, skyrocketing inflation, maybe even whispers of a recession investors. They tend to flock to assets that feel, well, safe.
Something that's going to hold its value even when everything else is going down the drain.
Right, like having that emergency stash of cash tucked away for a rainy day, but instead of dollar bills, it's, gold bars.
I like that analogy. So gold gives you that sense of stability, of enduring value, especially during those uncertain times.
Exactly. And it's interesting because Goldman does acknowledge that some of that, well, safe haven demand could taper off a bit after the U.S. election.
Yeah, that makes sense. Elections always bring their own kind of uncertainty. But once the results are in and the dust settles, people tend to feel a bit more, secure about the future.
Right. But here's the crucial point Goldman's making. Even if some of that election-driven demand fades away, they still think gold will probably remain a popular hedge against all sorts of future risks.
Like what kinds of risks?
Oh, potential trade wars, concerns about U.S. debt levels, even the possibility of a recession down the road.
So even if one storm cloud passes, there are always others on the horizon.
That's kind of the reality of the world we live in. Which actually brings me to a question for you. I mean, given everything we've talked about, central banks buying gold, potential interest rate cuts, and this whole safe haven thing, what other events or, global trends do you think could impact gold's appeal in the coming years?
Ooh, that's a great question. It really makes you think about all those forces shaping the global economy. How everything's kind of interconnected and how it all eventually ripples out and touches even something as seemingly simple as the price of gold.
Yeah, it's fascinating, isn't it? The price of gold. It's not just some random number. It reflects a much bigger story. A story about risk, uncertainty, and people searching for stability in a world that often feels anything but stable.
Exactly. And that brings us back to Goldman's prediction
Hmm.
that gold could hit $3,000 an ounce by the end of 2025. Of course, nobody has a crystal ball,
Right.
but their analysis definitely suggests that this whole gold rally might not be over just yet.
It really seems like gold's story is far from over. But let's take a step back for a moment
Okay.
and consider the bigger picture. The price of gold and all the factors influencing it, central banks, interest rates, global uncertainty, they're all kind of indicators of these massive economic and geopolitical shifts happening all around us.
So even if we're not all running out to buy gold bars, paying attention to these trends can give us a deeper understanding of the world around us.
Exactly. It's about connecting the dots, seeing the patterns, and asking ourselves, what does it all mean? What does it tell us about the state of the world, the direction things are heading in?
It's almost like gold is sending us a message, whispering secrets about the forces shaping the future, if we just know how to listen.
That's a great way to put it. It reminds us that finance isn't just about numbers and charts. It's intertwined with everything else that's happening. Global events, political decisions, even those underlying hopes and anxieties that drive us all.
So we've unpacked these three key factors influencing the price of gold today, but, I have a feeling there's so much more to this story. What other forces, maybe ones we haven't even considered today, could shape the future of gold?
That's what I love about these deep dives. Everyone opens up whole new avenues to explore. I really encourage you to keep digging, keep asking questions, and never lose that curiosity.
And on that note, we'll leave you with this final thought. The price of gold, as we've seen, it's influenced by this incredibly complex web of factors, from those big central bank policies to those subtle whispers of uncertainty we all feel sometimes. But what else might be shaping the future of gold? What role will it play in the world of tomorrow?
Keep exploring, keep those questions coming, and we'll see you on the next deep dive.
Where we'll delve into another fascinating corner of the world. Until then, stay curious.
It's that safe haven thing, you
Yeah.
know?
Okay, so let's unpack that a little bit. What does it actually mean when we call something a safe haven asset?
It's like when things in the world get a little, shaky.
Shaky how?
Geopolitical turmoil, inflation going crazy, maybe people are even starting to talk about a recession.
Right.
investors, they start looking for assets that feel safe, like really safe.
Something that'll hold its value even when it seems like everything else is, going down the drain.
Exactly. Like, you know how people keep an emergency stash of cash for a rainy day?
Yeah.
It's kind of like that, but instead of dollar bills, it's gold bars.
I like that.
Okay.
So gold gives you that sense of stability, that feeling that it's always going to be valuable, especially when times are uncertain.
Right. Which is interesting because Goldman Sachs, they actually say that some of that safe haven demand,
Yeah.
it might actually ease up a bit after the U.S. election.
That makes sense. I mean, elections always bring their own kind of uncertainty, right? But once the results are in, things settle down, and I think people generally feel a little more secure about the future.
Exactly. But here's the thing. Goldman's saying even if some of that election-related demand goes away, gold is probably still going to be, a pretty popular way for people to hedge against all those other future risks.
What other risks? What are they talking about?
Oh, things like potential trade wars, those ongoing concerns about U.S. debt, maybe even a recession down the road.
Right, right. So it's like even if one storm cloud passes, there are always more gathering on the horizon.
That's one way to put it. And actually, this brings me to a question for you. Thinking about everything we've talked about, central banks buying up gold, potential interest rate cuts, this whole safe haven idea, what other events or even global trends, could have an impact on how people see gold in the coming years? What else might make people think, okay, maybe it's time to buy some gold?
Ooh, that is a really good question. I
Yeah.
mean, it really makes you think about all those forces that are shaping the global economy, and how everything's kind of interconnected and how those connections can ripple out and affect even something like, well, the price of gold.
It really is fascinating. I mean, think about it. The price of gold, it's not just some random number, It's part of a much bigger story, a story about risk and uncertainty and people trying to find some kind of stability in a world that often feels, well, really unstable.
Exactly. And that brings us back to Goldman Sachs' prediction. That whole idea that gold could reach $3,000 an ounce by the end of 2025. Obviously, no one can predict the future perfectly, but
Right, of course.
their analysis really suggests that this gold rally, you might have some legs.
It really feels like there's a lot more to come with gold. But I think it's important to, step back for a second
Yeah, yeah.
and look at the big picture because the price of gold and all the factors that influence it, central banks, interest rates, that global uncertainty we talked about,
hmm
they're kind of like indicators, right?
Indicators.
Yeah, indicators of these massive economic and geopolitical shifts that are happening all around us all the time.
So even if, most of us aren't running out to buy gold bars, paying attention to these trends, it can actually give us a better understanding of what's happening in the world.
I think so, yeah. It's about connecting the dots, noticing those patterns, and then asking yourself, okay, what does this all mean? What does this tell us about where we are, where we're headed?
It's almost like gold is trying to tell us something. Like it's whispering secrets about the forces that are shaping the future if we just know how to listen.
I love that. It really highlights how finance, it's not just about numbers and charts.
Mm.
It's about so much more. It's connected to all those global events, political decisions, even those basic hopes and anxieties that drive us as human beings.
Right. And I feel like today we've really unpacked these three key factors that are shaping the price of gold right now. But I have a feeling there's a lot more to uncover. Like what other forces, things we haven't even talked about today, could influence gold's future. That's what makes this so exciting. Every deep dive just opens up more questions,
Yeah.
more paths to explore. It really makes you want to keep digging, keep asking those questions, and just never lose that sense of wonder and curiosity.
And that's exactly what we're going to do. So we're going to wrap up this deep dive with a final thought, and it's this. We've seen how the price of gold is influenced by this really complex web of factors. Everything from those big central bank policies, to those like almost subconscious feelings of uncertainty that we all experience sometimes. But what else could be shaping the future of gold? What role will it play in the world as we move further into the 21st century?
It makes you wonder, what else is out there? What haven't we even thought of yet?
Right. And, it's interesting. We've been talking about gold as this investment, a safe haven. But I'm kind of curious to get your take on gold's, well, broader significance.
That's a great point. For me, one of the most fascinating things about gold is how it kind of acts like um, a barometer for all those global anxieties.
Yeah.
When people start to lose faith in those traditional systems, when uncertainty starts creeping in, that's usually when you see gold prices go up.
It's almost like, I don't know, gold is trying to tell us something. sending us a signal.
Like, hey, things might be a little unstable right now. Better hold on to something solid.
Exactly.
It really underscores how connected financial markets are to everything else going on in the world, political events, economic trends, even just like the general mood, the overall feeling out there.
So even if we don't all become, gold bugs, just paying attention to these kinds of trends can help us understand the world a little bit better.
And maybe even help us navigate all that uncertainty.
Right. It's about making those connections, understanding the bigger picture.
That's what these deep dives are all about, really. It's not just about like specific predictions or investment advice. It's about expanding our awareness, making those connections, and seeing those patterns that we might miss otherwise.
I like that. So I think we've done a pretty good job of unpacking these three key factors that are influencing the price of gold right now. But as we've been talking, it's become pretty clear that there's so much more to this story. What other forces, things we haven't even considered today, could be shaping the future of gold? What role will it play as we move further into the 21st century?
That's the beauty of it all, right? There are always more questions to ask, more things to discover.
And we hope you'll keep exploring with us. Thanks for joining us on another deep dive. We'll see you next time.